investing. Investing in what? Probably investing in railways. Seems to be extremely old. But if we had to believe Warren Buffett, with his investing vehicle Berkshire Hathaway, this is a great opportunity and should be followed probably by many more people. He invested millions of dollars, billions of dollars in the Burlington Northern Santa Fe railways, a huge system in the US. So probably it didn't give that huge profits, but at least a very concrete cash flow. So probably investing in railroads in the 19th century is probably the same as nowadays investing in .com and all kinds of new tech companies. So on NASDAQ you could find plenty of these kind of companies. The primary idea of this session is that we would like to explain something about the US and Dutch relationships and something about capital markets and financial reporting. So let's start. So American railroads in the mid-19th century needs a lot of money. And with a lot I don't mean a few dollars, but they already need millions and millions of dollars. Important was that they need money. And the money was probably not always on the American capital markets as it is nowadays. So they went to London, to the London Stock Exchange and to the Amsterdam Stock Exchange. And we'll focus today on the Netherlands and the US. So on the Amsterdam Stock Exchange, the first railroad stock was the stock of the Illinois Central, which was listed officially in 1857. That is a long time ago. That's even more than 150 years ago. So that's important. So within a few decades, so there was not one stock or one bond listed. Within 40 years, another 150 bonds and stocks followed the idea of the Illinois Central. And even in 1913, just before the Great War, there were more than 300 American stocks and bonds listed in Amsterdam. It's few and nothing probably compared to what was happening in London, but for the Dutch stock market this was huge. Out of these 300, almost 200 were stocks and bonds related to US railroads. So always there were problems with the US railroads, like all the railroads around the world. There was also a rail mania, there was also a little railway bubble, all these kinds of things happened. And sometimes the prospectus of a new public offering was nicer than the reality. So sometimes investors lose trust in stocks and bonds. But now, one of the other things, that was the Illinois Central was the first American stock listed in the Netherlands. So other companies like General Electric, US Steel at the time followed that by the turn of the century. And it takes until the 1950s until Dutch companies get an idea of the American capital market, the New York Stock Exchange. Companies like Royal Philips, Royal KLM and the Royal Dutch Shell were listed in the 1950s at the New York Stock Exchange. Within a few decades, Unilever, for example, Hoogovens and other companies like Axo followed this example. And one of the issues thrown up by Kees Kamferman is that these kind of companies, due by the American influence, improved the Dutch capital markets and improved also financial reporting at that time. Let's go one step earlier. American railroads and other companies need money. And if you need money, you can go to the bank. But in some of the cases, you need so much money that even one bank or a consortium of banks couldn't help you. So several companies go with an initial public offering to the capital market. They ask money and in return they give them dividends and probably other returns on stocks. One important issue is that also these kind of investors need information. I trust my money, and I know it's a little bit risky, I trust my money to the managers. And those managers prepare annual reports audited by an external auditor, who just verify all the amounts in these annual reports. So if there is a need for capital, there is also a need for financial reporting. And that's also one of the good reasons to start with railways. Railways in the US and in the Netherlands were the first large public companies who need a lot of money. So these kind of companies produced lengthy annual reports. Early examples, like in the paper of Fisher, Pravitz and Sampson, show that annual reports, even in the first quarter of the 19th century, are extremely large. And also in the Netherlands, we see the same trend. Annual reports of railway companies are extremely big. They are nowadays, compared to nowadays, innovative. They're extremely nice, they're extremely lengthy, and they are full of tables. They even split out how many minutes trains are on delay. They split out what the revenues in the first, second and third class are. How many luggage is transported and to what price. They describe the price per mile, things we see now even in the aircraft industry. So that are important issues. Those reports in the mid-19th century were extremely innovative. So there you see, railways need a lot of capital. Investors are willing to provide it, but they would like to have interest. They would like to have returns on shares, and they also would like to have more financial information. In the US, in the second half of the 19th century, some of this information was already audited. In the Netherlands, it takes a little bit longer. Reports were comparable. We will discuss this later. This is not only the case for railways, but this is also the case for all other industries. You need money, you get money, but you have to pay a certain fee, dividend or interest, and you also have to provide things about your corporation. So for now, I think this is more than enough. So stop.